All right. Good morning, everybody. Good afternoon. It is 11 o'clock here Central Time. We're going to go over this week's broad market analysis. Before we get started, please hit that like button. And if you are using this information and it is helping you every week, go ahead and leave a post. I really appreciate it. First things first, I hope you guys understand that the clocks did go back. So the sun should have been peaking up a little bit earlier around where you live. And tonight, that's right. We have to face the darkness. So, meaning most of you will probably start to feel tired a little bit earlier than normal. I wouldn't say it's my favorite time of the year, but I'm definitely looking forward to the holidays and this week. This week is going to be super exciting. We are going to be looking at things like the election, which I think is going to be super chaotic. And I'm keeping my fingers crossed that we get some sort of range expansion. And I'll be showing you that here a little bit later on our futures section. I'll cover the ES futures, the NASDAQ futures, then we'll take a look at the RTY and the Dow Jones. So this session for your broad market analysis is going to get started here first by saying make sure you give me a follow out here on X. Make sure that you're following the right Trendy John because there are a lot of imposters out there. Typically, you can tell by the follower count and the people that I'm following. The numbers should be the same. And then again, look for little clues. Those tricky, people out there try to change little things in here. This is exactly what the at Trendy John looks like. Some will put like a number one in there, or they may put two N's or two D's in there. Just be very careful that you're not following somebody different. Also, I'll never approach you through my messaging and ask for any sort of money or any sort of links or something like that, okay? So again, give me a follow over here. The first thing that we're going to be looking at today on the broad market analysis is this week's major US economic reports and Fed speakers, okay? And one thing you're going to notice there's going to be a lot of talk about the elections, there's going to be a lot of chaos, and depending on which way percentages are swinging, it's going to have an impact on price action in the market. Just remember, even the election, for me, it is a catalyst that pushes price to supply or demand. Our job as supply and demand traders is to be ready and to take that trade when we get to our zone. Okay. Now, this week, because I'm expecting more volatility more than ever, I really think it's important to trade with an allocation that you're super comfortable with. Because if you're trading with something a little oversized with the volatility that could come into the market, you could find yourself at a stop very quickly and then just watch price move in the direction you thought it was going to move. So for me, smaller is better this week and wider stops or no stops at all. That's just the way that I'm going to approach this market. This week's major U.S. economic reports and Fed speakers. Again, Monday, pretty quiet out there. Again, there will be a lot of speculation on elections. Tuesday, I believe, is the election day. The 6th, PMI, but also my webinar. So if you're watching this, make sure you guys come around. I have a webinar. Be very transparent. It's going to be about a SPX service that we are going to be offering. It's going to be super inexpensive. And it's also going to include the neutral strategy. So if you guys have followed me for many years, you love the neutral strategy, which I know you do. That's going to be included in that, and we'll be talking about all that. And again, guys, it's super inexpensive, so don't miss out on the opportunity. It's going to be an only alert service, and it's going to have a chat room. It will not be an education room, just alerts. Okay, so I can't wait to see you guys. We'll talk more about it on Wednesday night. So we'll see you there. It should be 7 o'clock Central Time. And there will be more links and data about that so that you guys can get signed up for that. And it should be a quick one. All right. On the 7th, initial jobless claims, US productivity. But, the big interest here is FOMC interest rate decision, Fed Chair Powell press conference. This is pretty sus as my kids would say, this is sus, right? We have the elections that are coming out, and it just makes me feel like the market's going to go down. I don't know why. It sounds biased, but of course, I have longs on as well. but it just feels like maybe they're setting this up for, maybe Jerome Powell saves the market or something like that. Again, it's all about supply and demand, and we'll be going over those charts, but it is a little suspect. On Friday, we have consumer sentiment, and then rolling into next week, I just want to show you a little bit further out just in case there's something big in here. Consumer CPI, initial jobless claims, PPI, and probably still a lot of drama around the election. So don't think that the elections are going to only impact this week or like a day or two. I think this is something that could carry forward into the beginning of next year. Okay. The next thing that we want to be talking about is this week's earnings. Okay. So I'm going to come over here. I'm going to click right here. Earning Whispers at eWhispers is who I use. Very straightforward. Usually at the beginning of the week, you're going to find this there. Don't forget to give them a like. Go ahead and click on here, and you're going to see what's coming up for this week. Now, I have several names that I'm interested in: PLTR, HIMS, WIN, moving on, coming over here into Tuesday. SMCI, I'd really like to see. This would blow me away if these guys actually go up. Um, in their earnings. I mean, with all the drama that's been around this, I'm just really curious in the name and how it reports. And then we have DVN, Devon Energy, and then moving over to Wednesday. Uh, I hold shares in Celsius. We did really, really well in the beginning of the year, and then I bought the dip and then kept buying the dip. Very small position, but at the same time, it's not been easy. It's probably, one of those positions I'd like to see it do something. They did have a catalyst out last Thursday or Friday. Price went up just a tad, but overall, over the year high to where it's at now, huge pullback. ARM anticipating some earnings here. I'd love to see it. This name has a lot of volatility in it. This should be something that's fun to trade into earnings, so I'll probably most likely put an earnings trade on for ARM, and then going back to Celsius, I'll probably buy like some at the money puts or something like that, just to protect my position as well. Okay, or maybe sell some calls against the position. Okay, QCOM also coming out, and then moving on APP, and then on Thursday we have DraftKings, Moderna. Blockchain, or sorry, Square, and then we're looking at Rivian, and then moving on down. AFRM, love that name as well. There's a lot on here, guys. Airbnb, Pinterest. This is jam packed, so it looks like a really fun, amazing week. I can't wait until tonight starts. I really can't. So, futures are already showing, at least earlier. I know that some of my cryptocurrencies were taking a hit. So we may get a gap down there, but it looks like it should be exciting. Next thing we're going to look at is the bigger picture on SPY. So I like to concentrate on the quarter. And these are my notes for this week. Huge week, elections and FOMC. I'd imagine complete chaos. I'm actually hoping for chaos and not this boring, dull action that we've been seeing for several weeks leading into the election. We are 2 weeks down. I know you can't see that because, again, these are quarterly candles, but we're 2 weeks down, and the candle settled at the 9 EMA on the weekly. The quarter candle is now inside the previous candle. What I'm talking about is just the body of this previous candle. Current prices settled inside at the moment, but we still have 1 month and 29 days to go. So obviously that can change. One thing I can tell you, if you just kind of find right here where that level is for price to go up and over that body, which is around 574 and a half. Once it goes above there, we're looking at an up move. So that's kind of like your line in the sand, if you will, for this week going into this week. But again, when I say that on a week that doesn't have elections, it has a lot more value. There's going to be a lot of volatility, so we could see price up and over this level several times during this week. So just know that. As long as this candle, though, stays inside this body, I want to think sideways to down until price hits either a demand zone to the downside or we get up and over that line in the sand that I just talked about. The quarterly 9 EMA is at around $500. Now, why is this important? Because it's been several quarters since prices come back to test the cloud. And one thing that we know is if we go back and study the entire chart of the quarter, we always come back to the quarterly cloud. It's timing is the variable. So I want you to be aware of this just in case the catalyst pushes price into the 9 EMA, it will also be very close to my inside and up formation that we use to identify supply and demand. Okay. So again, these levels are very, very near and dear to my March 2025 hedge. So for me, I've been buying the 500s and selling the 460 in the event the market decides to pull back with a vengeance. Okay. Now, again, timing is the variable. Maybe I'm completely wrong. We get not a lot of chaos this week, which is hard to believe, and we just kind of go sideways into the end of the year. I'm really hoping not, and I'm hoping that you are also looking for some volatility in the market. All right. But, anyways, these are my quick and simple notes for this week going into this quarterly candle. And, far as support is concerned, you guys can see right in here between this 38.2 and 23.6. This is what we call the bull channel, and that lies between 544 and 518. I would expect some sort of relief bounce from there. But again, if the candle itself is dramatic and there's no, relief bounce in sight, I really would expect price to at least get a relief here on that 9 EMA. And if it continues down, we dip all the way into this formation, which I've been talking about the entire year. And if we get there, I would be looking for a long term call approach. Even if it does something like this, then I'm looking at least 3 to 6 months out, and then I'm looking for the bounce further in. So I have the hedge. I would take some of it off here if that happens, leave some, but I will also then start calls for even further out. Remember, these long-term trades like this, I want to be buying fear, okay? And then when we are buying a hedge, I've been layering into my hedge as we make these highs up here. I don't want to be doing the opposite. I don't want to be buying puts when the market's going down, and I don't want to be buying calls just because the market's up. The idea is that you buy things when they're cheaper, when they're on the clearance rack, okay? Let's go over into my next chart, which is going to be QQQ. And as a reminder, guys, go ahead and hit that like button. You've been doing an amazing job by, doing that already. And I really, really appreciate the feedback and the support. I really do. On the QQQ, same thing. I'm going to have some notes here. Really straightforward. Huge week with elections and FOMC. I expect chaos. Price is king. I want to remind everybody of that. Price is king. All right. No matter what I'm saying here, wait for your levels, execute your levels, and understand your allocation. This past week, price made a higher high but closed down. I have noticed price coming back to our support several times, and I'll show you that here in a second. Price closed at the support zone and the weekly 9 EMA. Again, this is a quarterly chart, so I understand you can't see that, but take my word for it. It did close at the 9 EMA on the weekly. The supply zone continues to be a wall. Makes sense as we near the election. Price is also inside the previous body, just like I was talking about. Um, because of that, it's sideways to down until we are above 188.3 or at a meaningful demand zone. Basically, the same thing we were just talking about. Now, here is the QQQ weekly chart, and this is what I mean. It keeps coming down to support, and then we find buyers there, and that's what I'm talking about with the 9 EMA. So price closed on Friday basically at the support again, at the 9 EMA, and therefore we got a little bit of a bounce. But this is, looking forward, the support zone is a support zone. My focus this week, and I'll show you towards the end of this video, is going to be a lot wider targets, and they're pretty dramatic. But again, I can't tell you what exactly is going to happen during this very big event for this year, but I think it could be very, very big, and I don't want to be too tight. Saying, hey, yeah, I think the support works, and then we're headed up to here. And in the event you get something like this, you're not prepared. So we're definitely going to go over in the event something big happens. Okay. So this is your QQQ. I showed you the trading view quarterly, and this is the weekly. Again, these are the levels that we're looking at, and this is what I was talking about. On the DXY and the dollar, let's go ahead and go over that. DXY is a dollar. Basically, what you're looking for is when the dollar is moving up, the market tends to pull back. Okay, so everybody should be thinking, "Hey, is the dollar going up? What could happen?" So here's my thing. We're going to take this to a weekly. All right. We're just going to talk about some simple technicals. Okay. So we had a supply zone, and let me tell you, we've been all over this. We're all over this. I mean, it's been really fun. We expected this. We expected the market to go bid. It went up. I'm going back to Orlando. When I spoke at the money show, things went really well. I was a bull when the masses were very bearish. We took advantage of that. Price came into demand. Market kind of settled out, didn't do a whole lot. It did continue to move up, but we hit the supply. And once again, I expected the dollar to pull back. And then, so because of that, we got very bullish again. Market went up, prices came down into demand. Okay, dollar did the same thing, started to move up. Things kind of settled a little bit. And then here recently, we still came back into the demand zone. I've been talking about caution. And again, we expected the dollar to move up. Now, it hit this supply zone, which is right in here, and it did stall the last 2 weeks. However, we are holding above the 618, and technically speaking, we're above the cloud. And because of those things, I can expect the dollar to continue to move up as long as the cloud holds. So, what are the numbers we could see? A possible move to 106.4 as long as 103.36 holds. And you can see here on Friday, we're over 104. Over 109, I believe the market most likely is in extreme panic mode. So that's right up here, and that's towards the bigger supply zone that we had found way back in the day. So it is possible that the dollar could move to here, and you'll hear a lot about it, and there'll be a lot of panic. Okay? So just know that, and I want to give you these more dramatic levels in case we get there. The next thing that I want to show you is going to be the 10-year treasury, the TNX. Let's go ahead and talk about that. So the TNX, same thing, very simple technicals. We came down to the inside and up formation. We expected this to bid up. I'm actually shocked that it moved up as much as it has, but now I'm not shocked, right? It makes sense as we near the election, a little bit of fear coming in. It also came into our inside and up formation, so we did expect this. I just expected it to stall a little bit last week, and it didn't. My expected range is 4.1 to 4.67. Same levels I gave you last week. We're at 4.3. So we're basically right between the two. Now, pure panic, in my opinion, pushes us up and over 4.9 to 5. So that's going to be this area. And then we find ourselves back at the highs and possible move into 5.9. This is where I believe if the market is panicking, and prices or TNX, sorry, pushes into this level, this will line up perfectly for Jerome. And if I were in charge of the market, this is the blueprint that makes absolute sense. Let's cause some fear. Maybe Jerome saves the day, or maybe he makes things worse. Price is king. Let's go ahead and move on. The next thing that I want to talk about is the skew. The skew basically is showing us what hedge funds are kind of prepping for. Now, because we're getting closer to the end of the year and because we have such a huge event, it'd be crazy for me not to go over this. I know that I've gone over it 100 times this year, but here recently, I haven't really. So I just want to make sure that everybody understands when you back this up and you take a look at it, it's worked very, very well over many, many years, and it has always been a part of my broad market analysis. When the skew rises, basically, hedge funds are looking for a pullback. All right. And it's been really easy to identify in a sense of just looking at these numbers and understanding the market and looking for those pullbacks. If you were to place a SPY chart or QQQ chart behind this, you'll see the significance of the skew. Basically, when it rises to levels like this, you expect a pullback anywhere from, let's say, a couple days to several weeks. The timing is the variable, but what we do know is when it gets this high, you better be prepared. Now, back in the day, when it rose this high, then prices would fall back into an extreme buy area or lower area where then the fear comes in and I'm buying that fear. Well, this year, not so much. Matter of fact, if we come back into this area of May 2023, we have stayed within this zone the entire time since May. And it took me a couple months to catch on, but I wasn't going to fall into the same trap that had happened in 2021. A lot of traders were using the data that we always use here and saying, hey, I think the market's going to pull back, but it just wouldn't. And therefore, the market continued to melt up, and you sort of missed that or you weren't pressing the gas hard enough. This year, not so much. We caught on very quickly. I caught on very quickly, and then I gave you that information. Every time prices come back to here, it's been a great idea to buy calls plus 5 days out. Now, because of the election, I feel like we could finally see. Now, I say that finally see, and I thought honestly, I thought this would happen in the second quarter, and it never did. All right, we could finally see this. Now, I want you to understand if the skew were to pull back here, this is extreme fear in the market. The majority or the masses would be very scared to go long. I get it. But these are the things that I look for. When we get down here, are we in one of those major demand zones I'm going to show you, or one of the major targets I'm going to show you in the futures? If so, I'll be buying the dip. Okay. Now, if you want to just trade the same ideas that we've been trading the whole entire time, and if the skew reaches down here towards 135, 132, it's currently at 146, which we're pretty close, then we just buy some calls 5 to 10 days out, right? I mean, because we could come back and go, holy crap, this thing worked again. And then we just, boom, shoot right back up. So it could be a fun trade. I mean, listen, if you trade with a comfortable allocation, this doesn't have to be so difficult. If you're trading outside of your means, then it could be very difficult for you. For me, I like to trade within my means, and that means a good allocation. So I can still try this idea since it's been working for so long. But I want you to be aware that we have not touched this since right back here in December of 22. And I still remember this. This was pretty amazing. The market actually went up. The SPY, or let's say the ES futures, actually went up 200 points. It's one of my first times seeing that besides, during COVID, that just on a regular time that the market went up so much. That's $20 in the SPY. So just please keep these areas in mind. To me, like with the election coming, and again, this is just my opinion, it's crazy that we haven't seen down here yet. All right. It is. It's really crazy because if we go back and we look, the markets always come into this area. Okay. And this again is where we create extreme fear, which leads me to my next chart, which is your fear and greed index. If you take a look here, you'll notice that we're sitting at neutral. Really, I mean, almost dead neutral at 50. Why? Because listen, you and I don't know what's going to happen. I don't care what you look at, what you think you have no idea. Remember, if you have any ego, if you've been doing amazing this year, please don't give it back all in the last portion of this year. Okay? Anything can happen. And the crazy thing that can happen during this time is volatility, where the market can spike so high, something you are not used to, and it can also spike very low, something you're not used to right now. And it can wipe you out on both sides. And sometimes when the bid and ask comes in very volatile conditions, it's very difficult to get out. See, everybody takes a look at the charts and they go, "Oh man, I could have made so much money here." But I'm telling you, when volatility comes in, you have to be ready to get in and out. So that means if I'm taking trades, I'm already setting where I want to get out before price gets there. You can't be sitting here looking at the charts and go, oh, yeah, I'll just get out when it hits, because it could happen so fast that you only get one chance. Fear and greed's at 49. Again, it's neutral. That should be no surprise to you. Let's go ahead and go into the futures and take a look here using Thinkorswim. We're going to open this up. Um, yeah, so I'm going for ES and the NASDAQ. I'll go over the normal charts that I always do, and then we're going to talk about the bigger targets, okay? Let's go here, and we'll start with our weekly. All right, let's start here. So, one thing you'll notice is that the past several weeks we had a support level here. It worked very, very well. It's actually sitting right on that support level. I took it out though just to kind of clean it up and show you that we came back to the bull channel. The bull channel from 422. What does that mean? That just simply means that I found 422 and then I went to the high. I placed my coefficients, and this is the 23 by the 38.2%. This is where, in most conditions, we will see a really nice bounce from here, especially when the overall trend is bullish. Sure, last week was bearish, but overall trend, bigger picture, is very bullish. Now, you're going to notice here on this chart, and we might as well talk about it since we're already here. These are the levels that I believe range could happen this week. And again, I'm actually keeping my fingers crossed that we see some dramatic moves. So they may or may not work. All right. But if we get there, at least we'll know what to do. If things just kind of are quiet and surprisingly quiet, then I would expect just everything between here to work, right? Like the bull channel works, we head back up, we hit some fib extensions and so forth. But my overall range going into this week, basically 6,000, let's just say 6,100, all the way up to about 6,250. And to the downside, I want to say around, 5,200. All right. Now, why am I putting these on here? Again, I don't know what's going to happen. I just want to put these on here because they are solid levels. And if we get the range expansion that I'm looking for, I want to be ready. Let's move on to the daily. As you guys all know, we have triggers. We use the smaller time frame to actually get in or out of these trades or go short or go long. So these are just reference points at very good levels. I kept last week's trigger long here and added two more to the downside. Okay. These levels, again, trigger longs, these are not to take blindly. We look at a smaller time frame and then assess if we want to get in. Your resistance for this week, 59.02, and short triggers not, I want to be careful here. I'm just going to place this up there where I believe, if we got a huge move, this is where I'd want to get short. Okay. Moving on into the 4 hour, this has been working well. As you guys can see, this supply zone up here has been working. We did hit a demand zone. It worked. I took it out of there because I want you to focus on these. All right. You can try longs at each one of these. Personally, once again, I would love to see more of a move down. Maybe you get relief bounces from here, but I would love to see something like this to kind of just scare everybody out and then get ready for a reset into the end of the year. Okay. Now, again, it could go totally opposite for me, and maybe it does something like this. And then all of a sudden, you get the breakdown, okay, and kind of catch everybody off guard. All right. So that is my 4 hour. The next thing I'm going to go into is the NASDAQ. And remember, just as an update, every single day we have blueprints for the morning. So this is more of the bigger picture or just certain time frames, whereas the daily blueprint is for intraday traders and so forth. Okay. All right, so right here, we'll get into the weekly. You guys can see we hit the supply zone perfectly, comes down, hits immediate support on the weekly. We're at that 9 EMA. We're at the immediate support. So far, things look pretty normal. Once again, very dramatic targets here. The range that we could see is down here towards 18,000 basically by 17.3, and to the upside possible 22 to 22.7. These are, again, pretty dramatic, but I'd rather be that than just trying to be super tight and then shock everybody if something bad happens. These are levels that can work very, very well. into everything that's happening this week. But again, just want to make sure that we focus on other levels outside of that range as well. Okay. Let's go ahead and move on to the daily. I left last week's triggers. So two, these were from last week. And then I went ahead and placed two more on here. These could be four chances to get long on a pullback. All right. And again, we wait for smaller time frames to decide whether or not we're going to take those or not. Okay. But so far, this one and on the ES is working. Um, but again, we'll have to wait to see where we open up tonight when we open. Okay, resistance up here, just using some trendy edges, 20,685. And then once again, trigger shorts way up here. Just want to be safe and kind of get that out of the way. All right. 4 hour looks the same. Demand zone's working. It's been tested. I personally like the demand zones a lot lower. A lot of these have already been tested and have worked. So any kind of big pullback will be ready for the bigger picture. Okay. And you guys, this one right down here, sorry. So right down here is where I'd love to be long. And again, this would be a nice little reset. If I'm wrong, by the way, guys, if I'm wrong and we take out all targets and do something like this, I like the approach of being conservative and waiting for my level to be reclaimed. Okay, so buyers would have to come in, reclaim this, and then I'll look to get long, or I'll be live with you guys and we'll go to a higher time frame and we may find something over here on a different time frame. Okay. All right, and then that's our blueprint for tonight. We don't need to go over that. And let's go over here to the RTY. All right, guys, so RTY or the IWM small caps. We'll take a look at this, look at the bigger picture. All right, so here we go. Once again, you'll see some stuff in the middle, and these can work very well. They've been working great this year. But in the event that we have a big pullback, I'm looking for 1,847 by 1,700, and to the upside, we could see the all-time high, which is over here at, and I apologize, let's take this off, 2,462 by 2,648. And then on the Dow Jones, okay, on the Dow Jones, this is just our blueprint. And by the way, our blueprints have worked amazing this year. So we've kind of played out all of the blueprints, and now it's down to seeing if we basically give all that back, or do we make all-time highs? 2024 target was hit. We came down into the demand this past week, basically. Sorry, this past month. So far, it's working. But as far as the bigger targets, anywhere between 37,000 and 33, and then to the upside, we've already hit, but 43, 43 by 48 to the upside. All right. And that clears that up. Now, my last subject that I want to talk about is going to be Bitcoin. All right, because I do hold cryptocurrency doing really well. And then this past weekend, things are kind of pulling back a little bit. So this is really straightforward. This is called Fibonacci. And I want to remind everybody our charts for the 2024 outlook for Bitcoin were spot on. They were on ES, they were on RTY, Dow Jones, and the NASDAQ. I am very confident in my charts. Now, what's basically happened is I was looking for a base over the 2024 high. And if we can keep that base above there, I do believe we can break out to 88 by 100,000. Okay. In the event, okay, we all know, I don't care who you vote for, I really don't. Price action is king. In the event something bad happens and price moves down, just looking at Fibonacci's and weekly demand zones, they're very, very well lined up with our fibs. So I will, in my cryptocurrency account, buy the dip here if we get into this area. I'll also buy it right before the 618, and then I'll buy again if we happen to come down here. Now, I understand this looks like total destruction, but again, I love buying a good clearance rack. Okay, so it's okay if we don't come all the way back here, but these are the places I am willing to buy. Okay. So again, that's what I'm looking for. And if we break out to the upside, just be aware that in here, you'll probably see a pullback. So let's finish this by saying, hey, listen, I don't know what's going to happen. I just am expecting a lot of volatility. On my charts, I have demand and supply. Okay. In the event that price comes down into demand, this is where I'm looking at taking my shot for the upside. Okay. In the event that the elections actually don't give you a buying opportunity and they go straight up, and let's say we make all time highs, that's why it's important for me to use Fibonacci extensions and have these blueprints ready. If price hits these extensions or these target levels that I'm looking for, I don't want you to be too euphoric. I want you to actually be concerned that maybe it's a pop and then it's a sell the news or whatever. All right. Nothing changes. I feel like sometimes in big catalysts like we're about to see is that people lose their mind. It's no different than every trading day. You're going to have fear and you're going to have euphoria. You really have to assess, am I buying? Am I super euphoric right now? If I am, maybe I need to take a step back and kind of just take a breather. Were you already long? Did you trim your longs? Are you paying attention to your total shopping cart? How much is in your account? How much are you net long? How much net liquidity do you have left? Are you buying fear? Are you buying puts in demand zones? Are you buying puts on fear? Again, I like to practice buying puts here and buying calls down here. No matter what, everyone, I hope you have an amazing week. And again, if you're looking for some guidance, come check us out at Simpler Trading. And don't forget about my webinar this Wednesday. Can't wait to see you there. Have an amazing day.